Good morning, it's the 7th of December. Welcome to the latest instalment of Talking Ball with me, Joe Neighbour from Signal Centre. Just me today, Steve still feeling a little bit under the weather, so wishing him well. Hopefully he'll be back with us in the next couple of days. So we're going to rattle through as much as I can today by myself and give you an update on what we're looking at on the technical front on the markets and also the latest news headlines. So obviously, first and foremost, Omicron remains very much in the news. New restrictions are now in place and showing up across the world as authorities are trying to stem the spread of the new variant. In terms of what's going on specifically, France have shut nightclubs for 4 weeks. New York City have called for a private sector vaccine mandate, and Hong Kong imposed quarantine requirements on more countries. So South Africa's rate of positive tests has climbed, but there hasn't been a surge in hospitalisation so far, which is a good sign. Mostly the Omicron variant is causing mostly mild illnesses, which is good news. In terms of what's going on in the corporate world, Tesla shrugged off a report that regulators opened an investigation into the electric vehicle company. It closed slightly lower on Monday. The stock had tumbled intraday, reaching a 23% decline from a record closing high, and its market capitalization briefly fell below that magical $1 trillion level. Tesla has been on a tough run in December with a combination of fears over Omicron and also the hawkish messages coming out from the Federal Reserve having gripped markets. Pretty much it on the news front. Not really an awful lot going on. We do have a few economic data points due out today, which we'll come on to shortly. So let's get stuck into some charts. Going to start off with the dollar index. Not much to report here. Still of the same opinion, we are trading in a bullish channel and expecting higher prices. We can see here that we've seen an uplift in price over the last 4 sessions or so, but certainly not overcoming the previous highs that we made back on the 24th of November. So for now, looks like the bullishness is set to continue, looking for higher prices ultimately towards 97.72 in the short term, but wary that we could see at some point a corrective move down to the lower end of the channel and this key support here at 94.74. If we take a look at Euro US dollar, that continues to grind lower. There is no sign of this turning anytime soon. We did see a bit of reprieve here on the upside, but we seem to be selling back into that, and therefore lower prices can be expected down to our ultimate target at 110.58. Once down there, then we can reassess, because that will see a completion of this head and shoulders top pattern and the reaching of that measured move target. So that will be quite interesting. In terms of what's going on with cable, that continues to slide lower, although we did see a little bit of a bounce yesterday and we are posting some green today, but ultimately the price looks set to decline towards this 38.2% fib level, which we've got a 131.65 area. In terms of the upside, expecting any gains to be capped around 133.53. If we take a look at euro sterling, that posted a pretty ugly looking reversal yesterday. We can see there that nice red, or bad red candle, depending on which way you're looking at it. Continue to trade within a bearish channel and no signs of that stopping. A nice sequence here of lower highs have been posted as well, and lower lows, so looks set to continue very much in a downtrend. Have a look at some of these riskier assets. Aussie US dollar, that broke down through some key support that we touched upon last week at 71.05. Really big impulsive move to the downside, having broken on the 3rd of December, but the last couple of days you've seen a bit of a rally higher. Maybe that's just a case of retesting now that 71.05 level, and we could see some selling re-emerge around this kind of zone. So although we've seen a bit of a bounce on the riskier assets, I wouldn't be getting too carried away, I don't think. This is Aussie yen. Quite an interesting move to the downside from these previous highs, but in the last couple of sessions we seem to have found some strength. We've got supports here at 78.82 and below that down to 77.89. So any bounce, I think, is likely to be short-lived, quite possibly, although we may just see a continuation of this range for a period of time. Just finally take a quick look at New Zealand dollar, US dollar. That broke down through this key support at 68.05. And although trying to rally over the last couple of sessions, it looks pretty negative overall. So I'd expect really any rally to be capped around about 68.05, and that could present some fresh selling opportunities for an expected continuation lower in price. Let's move on from currencies to cryptocurrencies. Bitcoin is trying to recover from the big move to the downside that we saw on Friday. We are obviously well off of those lows that we posted, and we've got 3 consecutive days so far of gains. Obviously a bit early to call it today, but all in all looking quite positive so far. Overall, the trend obviously remains very strong, but in the short term, I think we could possibly see some more volatility. So do be careful if you're trading cryptocurrencies. I took a look at Ethereum actually this morning. That looked quite interesting. I've drawn a sort of rounded kind of formation that seems to be taking shape here at the minute. I was actually looking at it on the intraday basis on the 4-hour chart. Price action quite range bound, as you can see here. Yes, we did have a bit of a plunge below here, but we quickly got back above those levels. So I pinpointed a level today at 44.55 to maybe consider a short-term sell opportunity into this kind of previous lows that we saw, which should now act as resistance. So looking at that from an intraday perspective could be an opportunity there. Ultimately, however, I think we are going to see more range-bound action in Ethereum. If we take a look at crude oil now, that is bouncing back from the lows that we posted last week. Obviously, we've seen now a break of this channel, which should lead, I think, to probably a deeper correction. Although we have seen a bounce take shape over the last few sessions, it may just be a case of trying to now retest the underside of that broken channel. We've got some resistance at 74.82. That for me is where I think we could see the sellers step back in and potentially send this lower. It's very early again, but I mentioned the possibility yesterday of a kind of head and shoulders top maybe taking shape here. So maybe what we could see is something like that, form a large top, and then lower prices could be seen. But it's very speculative at this stage, but just something to bear in mind, obviously, given how strong oil has been in recent months. Maybe it's time for that to have a bit of a cooling off and for a deeper correction to take shape. But for now, the buyers are having a bit of fun from these lows down here at 61.69. It just depends on where they sort of think about coming out of their positions and start taking profit. And maybe 74.82 could be a reasonable area to take a look at on the taking profits on longs or initiating shorts. Looking at gold, again, really difficult to see anything going on with this. It's really quite a boring market at the minute, if I'm honest. We did see a breakout of this channel back here, which we thought maybe was the completion of a long-term bullish flag, but that's not to be the case so far. We actually saw the sellers step back in pretty quickly, and now we're heading down towards 17.50 again on the price. So not really much going on there. I've got support level at 17.45, which I may be interested in taking a look at to initiate some longs, but not really getting much excitement from that at this moment in time. Good news on the UK market, that continues to move higher. We saw a really strong move to the upside yesterday, and that's been backed up today by further gains, up nearly 1%. So it looks set to maybe go on and challenge those previous highs at 74.05. Still some way off all-time highs. We have to go back here for that in May 2018. So, where other markets post-COVID have gone on to hit new all-time highs, FTSE really has been lagging. But it's being helped today by mining stocks, oil stocks, and also bank stocks. So looking pretty good, but it remains to be seen what sort of reaction we get at that 74.05. Will that be a trigger for some profit taking? Or are we going to see a decent breakout to the upside and a continuation higher to retest these highs back in January 2020? So that would be a complete recovery from post-COVID, which would be good to see. If we take a look at the DAX, that is outperforming the FTSE 100 today, up by 1.5%. I guess markets are being boosted today by the fact that the news coming out from the omicron variant has been quite positive and that cases have been fairly mild. So that seems to be boosting risk appetite today. We've seen a bounce from these lower ends of the support range. Down at sort of 15,000 to 14,800. Nice couple of sessions to the upside. Got some resistance above at 15,863, and then above that at 16,000. which may cap some upside advances today, but all in all, it's looking pretty strong. If we take a look at the NASDAQ, the futures are indicating a much higher start, 1.5% higher here as well, and we've seen some buyers step back in. So this previous high here acting as support. This was the high that was posted back in September. Then we saw a move lower, a breakout above it, and now it seems to be doing a job as support. So yesterday we saw the buyers step back in, and that's being followed through today with some more upside momentum. Still looking very strong overall, and no signs of that slowing down. So if the strength maintains itself, then we'd be looking for a retest of the previous highs up at 16,768. S&P 500 is up 1% in the futures market at the moment. Looking pretty robust and pretty strong. Again, similar sort of technical setup to what we just saw on the NASDAQ, although we did see a bit of an overshoot of this level on the S&P 500 at 4551. But yeah, we're looking pretty strong again, and potentially going to go on and test those highs at 4744. Typically, December is a good month for stocks, and after a bit of a wobbly start, it looks like the markets are finding their form. And with the worries over Omicron being tempered a bit, then we could see some decent moves to the upside into the end of the year. Finally, going to take a look at the Dow Jones. So this has moved pretty substantially higher again, although it is lagging behind some of the other markets, only up by 0.7% today so far, but looking very strong indeed, and wouldn't be surprised if that goes on to retest the all-time highs up here at highs of 36,563. So looking pretty good. All in all, risk appetite seems to be back today, and markets are pushing higher, which is good, of course. Okay, gun to the head trade from yesterday. I picked New Zealand dollar, Japanese yen. This was the trade here. I was expecting just a continuation lower. We saw a break lower in the early part of the session. Late part of the session on Friday, and then was looking for a rally into this level at 76.66 to get short. And come the close, or 9 p.m. when we closed these trades off, I was 0.65 R offside. So not a stop out, but certainly not a win. So need to try and find something else that's taking my fancy today. I mean, overall, the trend still looks pretty bearish on that. So, I would probably stick with that. But I'm going to go with this Ethereum trade, I think, because I've posted it up on a couple of our channels. I'm going to do a video about it shortly as well for some clients. So ideally, I want to be selling that at 44.55. It is trading in a range, and I think that's going to continue. So I'm going to move that out of the way and get in at market, which is currently 4418. Let's get in there. Keep the stop quite tight. I mean, ideally it needs to be above there, but that's 5%. So we're going to have to target and move back down to these lows. So the spike lows that we saw last week on Friday comes in at 35.77. Stop loss at 46.70. Looking for 3.3 R. So I am looking for a break to the downside of that range, but we'll see how that goes today. Okay, so data-wise today, we've got German ZEW at 10 a.m. The economic sentiment is expected to fall to 26.1. At 1:30, we have the US trade balance. The deficit is expected to narrow to $66.8 billion. And then at 3 p.m., we have the Canada IV PMI number for November. The index is expected to fall to 58.7. So a few bits to keep us interested today on the economic calendar. That is it from me. Wishing Steve well. Hopefully he will be back with me tomorrow and we can do a little bit more of an in-depth look at some of these charts. But until then, everybody, hope you have a great day and catch you tomorrow. Goodbye.